there's always going to be a huge, about 7-hour window every day between about 2 a.m. when we have Paris and Frankfurt open. And this is all, very much pre-market, right? So we got the 2 a.m. Eastern, Paris and Frankfurt. And, you're going to have a 2-hour overlap, by the way, with the Asian session. At 3 a.m., we have London, okay? And again, we'll have about a 1-hour overlap with Asia. But by 4 a.m., that's the end of the Asian close, and that 3 hours to 7 a.m., where I generally just say the New York Financial Center is pouring its first cup of coffee. Right? That's what we're talking about. New York basically has their first espresso. Or let's roll it South Florida style. You ever have a Cuban coffee? So we're waking up, right? We're waking up. That's where the participation, that's where the volatility often starts to kick in. So the whole idea that we can look at 9:30 to 4 is really predicated on the Wall Street psychology, the Wall Street bell, the clearing range, etc. So one of the things that I will tell most traders is by about 9 a.m., whatever you're doing, just remember you're closing in on that window to the bell. By 9:30, if you can take something off the table, if you can pay yourself, and in the case of today, the move from here up to here, right? That move right there, if you decide, you know what, I don't want to deal with the bell. It's not a lot, but I can take a little something off the table. It's not a price-based entry, and this is something that I think day traders know pretty well. I'm going to draw a clock. It's a time-based entry. That looks like a pizza pie, but it's a time-based entry or exit. Sorry, it's a time-based exit. You're not getting out because of price. You're not getting out because of any dollar amount. We don't even do that anyways. It's always support, resistance, price movement ranges. But we're getting out because of time, and the time means we're going to have this volatility event. And then, and this is a cool layout then to switch over to. You head on over here and you pull up the 1-minute chart with the clearing range breakout breakdown automated on it, and we start looking at where you might be able to re-enter the market on a breakout or breakdown. And do I not have that study running on this? I might not. So let's activate it because I do want to show it to you for those of you that may not have seen this. There we go. Okay. So you see right here the breakout that triggered. So this is triggering after the first 30 minutes of the bell. That tells us that we can get long. And look, if we can stay above that middle line of the VWAP, if we can stay long above support levels, above the wave, above major or minor psychological levels, any number of things. By the way, the minor psychological level, the expected price movement range, and the middle line of the volume weighted average price, that was all that pre-9:30 rationale for the entry long. And this just happens to be then one of those days that continues to meander higher. Do we know this at the beginning of the day? Absolutely not. We're just going to continue to roll higher. No, it's great to know that that's what's happening. And then you can go out to a 3-minute, 2, 3, 5-minute chart and start to look for pullback buys and continue to engage the trend. As long as the candles are green, as long as you've got confirmation of the trend, you just keep following it. And for a lot of you, you know that, especially on the 1 minute, or probably even a little bit later on a 5, we finally broke. We finally broke down just right about 1 o'clock. And that was really where the day trade ended, right? And it's Friday, so if you start deciding, hey, the day's wrapping up, I'm in the latter half of a Friday, the end of the week, That's a pretty darn good way and time to call it a day.